This morning, futures are pointing higher. Here's what you need to know before the bell. Over the last couple of days, markets kind of traded sloppily, really didn't do a whole lot, holding on to support right here at the 20-day and the 100-day moving average. Again, despite all of the recent market headlines of bank crisis, economic turmoil, etc., markets have been doing exceptionally well, continuing to make an upward trend in price. The MACD buy signal is now triggered. Markets are not grossly overbought yet. This morning, futures are pointing higher after a couple of days of sloppy trading. Again, markets are really contained here between this 100-day moving average and the 50-day. And as we talked about yesterday, what we're looking for in particular is a move above this 50-day moving average. That would give the market the ability to come up here and retest the previous kind of support that was set up during that topping process in early May. That's right at 4,100. So that's our kind of initial target right now. We talked about this in detail yesterday on our blog post on the website, talking about 4,200 as a potential target here for this market rally, with the MACD here fairly oversold and turning up. Our money flow indicators also on a positive buy signal, and the market's not extremely overbought yet. There's still some fuel here to kind of lift the markets higher. And again, as we have this lack of news more than anything else right now, this is allowing the markets to rise here a bit. Now that we're past the FOMC meeting, we've gotten past what seems to be at this moment the banking crisis. Now this kind of lack of news is allowing the markets to kind of drift higher here, at least momentarily. We'd added some exposure previously for this rally. We'll see how this works out. And again, as we start to get up towards our targets, we'll take that exposure back off again. This is simply for some trading purposes to participate in this rally. But outside of that, stepping back here a little bit longer term, it's important to see here that the markets continue to really define this consolidation process that we've been working in really since the peak of the market in January of 2022. We've been compressing this price action, rising bottoms here along with these declining tops. At some point, this market is going to have to make a declarative move in one direction or the other. A breakout to the upside should be a fairly substantial move higher. A break to the downside is going to be a retest of at least those October lows, if not lower. Of course, this is going to be driven by some type of either financial or economic event in one direction or the other. Either this market's going to realize that the economy is doing better than expected and markets are going to start going higher based on higher earnings estimates, or we're going to have an economic recession and the markets are going to adjust for that as well. So we'll see what happens, but the key to watch here is for a breakout of this consolidation at some point. That's going to dictate the next more directional move of the markets. I'm your host, Lance Roberts, and that's what you need to know before the bell.